Welcome back. In this session, I will be introducing you the idea of conceptual framework that developed by ISB. What is a conceptual framework? A conceptual framework forms the theoretical basis for determining which events should be accounted for, how they should be measured, and how they should be communicated to the users. In its first draft of its conceptual framework, FASB claims that the conceptual framework should provide a coherent system of interrelated objectives and fundamentals that can lead to consistent standards, and that prescribes the nature, function, and limits of financial accounting and financial statement. In his comment, Richard McVee claims that this view of understanding of conceptual framework would be very much like to understand it as a constitution. Thus, the relationship between the conceptual framework and accounting standard would be very much like the relationship between a constitution and its regulations. In Mary Bath's work, she contends that the conceptual framework should provide a minimum guidance that give effect to the principles, and principles including recognition, what kind of the items that we should recognize, how we should recognize them, how we measure the accounting items, the measurement principles, how we present and disclose them, the presentation and disclosure principles, and how we de-recognize it. It is important to note that the conceptual framework is not an accounting standard. It does not prescribe recognition, measurement, or disclosure requirement for specific transactions. It does cover concept and definition around it, but does not apply or does not specify for a particular transaction, and that is being dealt in a particular standards. It provides foundation for the standards so as to contribute to the transparency of the company, to strengthen the accountability, and also contribute to economic efficiency. When there is no specific guidance that can be used or can be derived from accounting standards, conceptual framework should be the first thing that accountants should be looking to help them to address new transaction, new accounting items. As we know that accounting standard has been developed for decades without a conceptual framework, so why do we need it now? There are various reasons that ISB has specified to have why should we have a conceptual framework. First, it would be helpful to design principles. If there are no principles, standards would be conflict with one another, as there is no systematic approach. It should also be noted that the conceptual framework does not prescribe what is there. But however, what they can tell you is they tell you what ought to be done. Like what kind of information would constitute as useful? What kind of information would be considered as faithfully representing the economic phenomenon? So the framework would help to resolve a lot of conceptual disputes, especially when standard setters may have a different understanding or different approach to certain definitions. So it provides a common set of concepts, a widely accepted terminology, and also agreed set of definition. So when you speak of a concept of asset, where you say something about income or profit, people who know about those concepts would know what you're referring to. But there's some critique that they think the conceptual framework is trying to confer legitimacy. It only enhances the authority of the standard and also the standard setters. The idea to have the conceptual framework was said to reduce influence of political pressure, but sometimes that was not the case. In fact, conceptual framework or ISB as such an independent standard setter, they're often being influenced significantly by the economic and political pressures, which I will come to in a minute. Some also criticize that having a conceptual framework would simply to help to improve the status of accounting as a profession, because that means they have designed certain standards and they create the rules for this particular practice. There are some questions that need to consider. Conceptual frameworks, the idea is to have a theoretical basis and principles on which to base our accounting standards and practices. But as I said, sometimes the economic and political reality does influence on standard setters. So during the 2007 and 2008, the financial crisis, the IASB faced enormous pressure from the European Union of letting the bank to evaluate their asset according to cost instead of according to fair value. And the European Union was actually threatened the IASB that if they do not let them to do such alternative, then they would withdraw their contribution to the Standard Setter Board. And at the end, the IASB has to compromise and actually allowing the alternative to exist. And that explains how economic forces and the needs of the capital market sometimes does affect how the standard setter would operate. They're not operating in a vacuum. They are receiving monies, and so they would be compromising certain approach for some other consideration or some other interests. So on the one hand, you have conceptual framework, which is about putting theory into practice. But on the other hand, you have actually, they're strongly affected by the practice. So it's as much about putting practice into the theory as the reverse. Let's have a look at the progress that have been made so far by the IASB to develop a conceptual framework. 1989, they have issued the first framework for the preparation and presentation of financial statement. In 2010, this conceptual framework for financial reporting is very much benefited from the collaboration between FASB and IASB. And as we have seen, in 2014, IASB decided to go ahead to develop a conceptual framework alone. And then 2018, this conceptual framework was released. 2020, in January, this framework has become effective. I would suggest you to pause the slides and then watch the video and see what the kind of changes has been introduced by the revised conceptual framework. The purpose of the conceptual framework is to assist IASB to develop IFRS based on consistent concept, to assist the preparers to develop consistent accounting policies when no standard applies or when standard allows a choice, to assist all parties to understand the standards. The conceptual framework, as I said, is not a standard, so it do not override any existing IFRS. It contains requirement about how to define certain accounting items, elements, how to recognize them, how to measure, how to present and disclose them.